Are you ready for what could be the largest tax cut in American history? President Donald Trump has just unveiled a massive new tax plan, and if it passes, millions of Americans, especially tipped workers, retirees, and those working overtime, could see huge savings. But what does this really mean? And more importantly, how will it impact you? Let's break it down. 1. No more taxes on tips, a game changer for service workers. Right now, tipped workers, like bartenders, waiters, hotel staff, and drivers, have to report every dollar of their tip earnings to the IRS. That means they pay income tax, Social Security tax, and Medicare tax on money that customers freely give them. Trump's proposal seeks to completely eliminate federal taxes on tip income, allowing workers to keep 100% of their tips. This would significantly benefit the estimated 4.4 million tipped workers in the U.S., many of whom earn a base wage far below the standard minimum wage. A major reason for this change may be the widespread underreporting of cash tips, which makes IRS enforcement difficult. The government has previously offered tax credits to businesses for reporting employee tips, but under Trump's proposal, such incentives would likely be eliminated. While this policy puts more money directly into workers' pockets, it could also significantly impact federal tax revenues, requiring alternative sources of funding to cover the gap. 2. No more taxes on Social Security, relief for millions of retirees. Social Security benefits are currently taxable if a recipient's income exceeds $25,000 for individuals or $32,000 for married couples filing jointly. Depending on income levels, beneficiaries can be taxed on 50 to 85% of their benefits. Trump's plan seeks to completely eliminate federal taxes on Social Security benefits, ensuring retirees, disabled workers, and survivors receive their full payments without tax deductions. This would immediately benefit millions of seniors, particularly those who rely primarily on Social Security for their income. However, financial experts warn that this move could cost the federal government $1.5 trillion over the next decade, leading to concerns about the sustainability of Social Security funding. The Social Security Trust Fund is already projected to be depleted by 2034, and eliminating this tax could accelerate insolvency to as early as 2032, unless new revenue sources are identified. 3. No more taxes on overtime, more money for hardworking Americans. Over 10 million U.S. workers regularly work overtime, which is currently taxed as part of their standard income. The Fair Labor Standards Act, FLSA, mandates that employees receive 1.5 times their regular pay rate for hours worked beyond 40 hours per week. Trump's plan would exempt all overtime wages from federal taxation, allowing workers to keep more of their hard-earned income. This change is expected to incentivize employees to work additional hours, benefiting industries like healthcare, emergency services, manufacturing, and retail, where labor shortages are common. While this policy helps workers financially, it also reduces tax revenues. Additionally, some experts warn that businesses could restructure work schedules to rely more on overtime labor instead of hiring new employees, which could exacerbate worker fatigue and job market stagnation. 4. What happens next? These tax proposals could completely change the way Americans are taxed, putting billions of dollars back into the hands of workers and retirees. But before they become law, Congress has to pass them. Republicans will likely support these cuts, but there's bound to be pushback from Democrats concerned about federal revenue and Social Security funding. So what do you think? Should these tax cuts be passed? Will they help hardworking Americans or create long-term financial problems for the country? Drop your thoughts in the comments below. Make sure to like, share, and subscribe for more updates on major policy changes that could impact your wallet. Thanks for watching, and I'll see you in the next video.